Welcome back. Bart, before the commercial break, we were talking about supply. Are you still seeing a lot of constraints in the system that could actually support commodities?
Yes, we are. We are seeing pretty significant interruptions on the mine site. In the case of copper, we're looking at above normal interruptions, and that has resulted in less product being produced. That means that the expected surpluses may not materialize. We could indeed have a balanced market at a somewhat of a surplus somewhat of a deficit, and that, in the face of weaker demand, has been supportive. I'm not sure it can prevent a downward drop over the next few months, but it may very well mitigate the magnitude of any drops. Oil is another one, though that is more of a policy-driven response, where OPEC back in April cut 1.2 million barrels of supply, and just yesterday, overnight, told us that they are very willing and able to cut supply more. And it's just testament to their market control. The fact that we've not been investing in fossil fuel capacity, that we could see less shale production next year than potentially this year, or certainly the growth rate. So those are all supply side factors that are unique to this particular cycle. Even if we're seeing, demand expectations lowered, what we're seeing is the supply side serving as support. Doesn't mean that it doesn't drop, and perhaps more, but it just means that the magnitude of these corrections may be less than what we're used to historically.
Okay, let's talk about oil. NYMEX crude hovering around 73 US a barrel, certainly a lot lower than the 120 that we saw last year. How much is the Ukraine-Russian conflict still a factor? In other words, how much are we seeing, the risk premium being priced in?
I think there's some, but probably a lot less than at the start. As it turns out, Western policies to limit Russian revenues have been successful, while at the same time we have continued to see Russia export, as much as they ever have to the rest of the world. So we didn't see as big a negative supply shock from the Ukraine-Russia conflict and the sanctions as we thought initially. There is plenty of oil to go around. The recent concern was that there's going to be too much, and hence the OPEC reaction. So I think the policies have been effective, but they're doing what they're doing. They're allowing oil markets to function properly, to be well supplied, but at the same time, they're limiting Russia's ability to get revenue from sales of said oil.
Bart, what's your outlook then for oil, at least maybe in the near term, and say a year out? And how do you recommend investors approach investing in it?
Well, we generally don't recommend. We give our views, but we don't give investment advice. Though we do have a model portfolio that we work with, and we have an outlook. And what we're thinking right now is that oil prices will likely go up quite significantly in the second half of the year. That is due to several factors, the demand side and the supply side. Let's talk about the demand side. We're still looking at some 2 million barrels of demand growth globally. And that is in spite of the fact we're seeing a possible and a likely recession in the United States. Why is that happening? Well, China is normalizing. We're probably going to see 1.2 to 1.4 million barrels of oil demand increase between Q1 of this year and the end of the year, for no other reason, because the Chinese population is starting to travel again. The COVID restrictions have been lifted, so things are normalizing. We had such big drops, so now we're just, even as we venture into normality, that represents pretty large year-on-year increases.
Hmm.
And of course, it should be said that it is a very rare recession where the actual demand declines. Typically, it doesn't. When we talk recession, we're usually referring to the Western world,
Yeah.
but there's a whole bunch of other places other than the West that will be growing, and much of the demand will come from there as well. Our demand probably isn't, going into negative territory either. And on the supply side, well, we have an OPEC that is quite committed um, to making sure that any overage of production gets mitigated, that the accumulated supplies get used up, and they've cut 1.2 million barrels. They've announced that in April. And as they've mentioned, very recently, they're willing to do it again.